Hey, what is up, guys? This is Gen Z Finance, and I'm back with another video. This one is going to be about Dropbox, a stock that looks to have a lot of growth potential, and why I believe this is a buy. If you guys could like the video and subscribe to my channel, it would mean a lot. As always, guys, I'm not a financial advisor. These are simply just suggestions and ideas that I've come up with for my own investments. If you choose to follow what I do, it is at your own risk, so be careful and do your own research before you perform any of the trades that I perform. If you guys are new to the whole investing atmosphere and don't currently have a Robinhood account, I will leave a link down in the description below to sign up. And when you do, using my link, you get a free stock valued at up to $200 for free. All you need is to be a US resident, be 18 years or older, and have a social security card. Alright, so now it's a video. The stock that we're going to be looking at today is called Dropbox. Its ticker symbol is DBX. As you can see here, it's right here. It is an American-based company that is a file hosting service. They offer cloud storage, file synchronization, personal cloud, and client software. So they are similar to one of my previous videos about Salesforce in the way that they both provide client software, but Dropbox also provides a space to store data for relatively cheap. Basically, instead of companies needing really expensive hardware to create a large enough server to hold all their data, they can instead use Dropbox's service, which lets them use their servers to store all their data and access it through the cloud. They can also be used for personal use because it lets you save files online and sync them to any device, which is very similar to companies like Microsoft OneDrive and Google Drive. So it acts as a separate in the cloud hard drive, and the benefits of this is it can be accessed anywhere that has internet. Okay, so this is Dropbox's Q2 earnings report. As you guys can see, it's 12 pages long. It's a lot of reading, and some of it gets kind of hard to understand, but we'll go through their bullet points they have on the first page. There's a lot of promising information here. As you guys can see, the total revenue was 467.4 million, which was an increase of 16% compared to last year's Q2. Also, their annual recurring revenue, ARR, ended at 1.931 billion, which was an increase of 67.3 million quarter to quarter, an increase of 17% year over year. And as you guys can see down here, their paying users ended at 15 million compared to 13.6 from the same Q2 of 2019 last year, which is 1.4 million new users. And with those 1.4 million new users, their average revenue per paying user also went up over $6 in that same period. They have also dropped their operating margins from 8.5% in that same Q2 of 2019 down to only 2.7%. And then lastly, another big thing that I saw is their net income per share increased by 12 cents compared to the Q2 of 2019, which is very promising and shows a very healthy growth in the company. And with all this data, I mean, if you guys wanted to, you guys could scroll down. I can leave this PDF in the description below if you guys want to take a better look. With all this information summed up, it is growing at a really healthy pace, and it is setting itself for a long runway of growth. This company will be growing and profiting for many years to come. This article further adds more confidence in my decision that Dropbox is a buy, because as you can see here, Dropbox is covered by 14 Wall Street analysts, and among the analysts, 10 of them recommend it as a buy. And now it does say to recommend as a hold and to recommend as a sell, but the mean target price of all 14 is $27.36. Now, Dropbox's recent dip in its share price brought it down to only $19.85, and as you can see, in the past month, it has dropped almost 14%. Even though it had a really great earnings report, and if I scroll down, Robinhood has an easier way to understand the growth right down here. The earnings are just consistently going up. As you guys can see, it is a very healthy and consistent growth out of this company since 2018. So I see no reason for why Dropbox won't go to the analyst target price of $27.36, which if it were, it would have an increase of almost 38%. So if you guys are looking into possibly investing in this stock, I would recommend getting it soon and maybe waiting to see what happens on the next couple trading days to see if it continues to fall in price. However, if you watch the stock close enough and pick it up around the bottom of this dip, you can make a lot of money on the stock. Again, guys, I'm not a financial advisor, and everything I say are just suggestions and ideas for my own investments. If you choose to follow the moves that I make sure to do your own research on it before performing any trades, and remember to do it at your own risk. Alright, that is going to be it for this video, guys. I hope you enjoyed and learned something throughout this video, and I'd love it if you hit the like button and subscribe to my channel. It would mean a lot, and I'll see you guys in the next one. Peace.